Welcome to Illuminati Silver. We tell it the truth about silver. Today is Saturday the 3rd of September 2022 and we're publishing our gold and silver weekly update for the week ending the 2nd of September. Gold and silver prices fell yet again and we're not really expecting much happening this coming week. Why? Let's take a look. Looking at precious metals first, gold fell $26 last week, falling from $1,739 to $1,713, having been as high as $1,745 and as low as $1,689. Once again, a lower high and a lower low compared with last week. This represents a fall of 1.5%. In sterling terms, gold finished the week at £1,487. That's actually up £6. And in euros, it closed at €1,720. That's down €24, showing the weakness of the pound, particularly against the dollar and the euro last week. Silver fell 85 cents, falling from $18.92 to $18.07, having hit a high of $19.12 and a low of $17.58. Like gold, a lower high and a lower low than last week. But unlike gold, rather than a fall of 1.5%, we've actually experienced a fall of 4.5%. In sterling terms, silver closed at £15.69, down 42 pence on the week, and in euros it closed at 18.15 euros, that's down 0.84 euros. The gold to silver ratio rose from 91.9 to 1 to 94.8 to 1. And if we start to seriously enter into an economic recession, and particularly a global recession, we could yet again see a gold to silver ratio reach that 100 level. Hopefully that won't happen. However, we certainly cannot rule it out. Now, looking at the prediction we made last week, we said we expect to see gold trade between 1675 and 1775, with 1650 and 1800 as outliers. And gold traded well within that predicted normal range. With silver, we said 1775 to 1950, with 17 at the bottom and 20 at the top. And again, traded within that range, though it did just dip into the outlier range towards the bottom by 17 cents for a very short time. The range between gold's high and low was $55, and silver's high and low difference was $1.54, much higher than it's been in the last couple of weeks. Now, we shall look further into gold and silver after we've assessed the other financials. Bitcoin continues its recent descent and currently stands at $19,850. That's down $332. And it's below that up until now supportive $20,000 range. We shall see if it reverts back above that so that it then creates support rather than resistance, which is where we're at now. If it breaks down, however, from here and goes below 19,000, we can very well see 15,000 Bitcoin before the remainder of this year is played out. Equities were again lower this week, right across the board. The Dow Jones closed on Friday at 31,318, down 337 points on the day, that's on Friday, and down 965 points on the week, following the previous week's fall of 1,423. The S&P closed at 3,942, down 42 points on the day, and down 115 on the week, and the Nasdaq Composite closed at 11,630, down 154 points on Friday, but down 511 points on the week. So what does this mean for the equity markets over the last 12 months? Well, the Dow is down 11%, the S&P is down 13%, and the Nasdaq is down a whopping 24%. However, partially because of the strength of the US dollar and also other factors, we've seen a little relief within the energy sector. Brent crude closed at $93.02. That's down $7.97, so almost $8. and WTI crude closed at $86.87. That's down $6.19 on the week. Now, this is what's perhaps affected gold and silver prices and commodities generally. The dollar index stands at a whopping 109.5, up 0.70 points on the week, and almost touched our predicted 110, being shy by just 0.023 points when it reached 109.977 this past week. Now let's take a quick look at the data that was announced by the US and could and did affect prices to some extent, and also the economic data that's going to come out this following week. Well, on Tuesday, we could see the Consumer Confidence Index, which came out at 103.2 for August, higher than expectations of 97.4. On Wednesday, we saw the ADP employment report, which gave us a signal, really, or at least an indication that perhaps things will not go so well when we see the non-farm payrolls on Friday. And we could see that August only added 132,000 new jobs against expectations of 300,000. The Chicago manufacturing PMI came in broadly as expected. Then on Thursday, we had the continuing jobless claims at 1.44 million, which was higher than the previous week, and also the initial jobless claims at 232,000, which were lower than the previous period. So slightly contradictory. The S&P US manufacturing PMIs came in again broadly as expected, and so too the ISM manufacturing index. More positive than negative, but not really out of kilter. However, much has been made of the non-farm payrolls on Friday, where we could see that the figures came in for August at 315,000. This compared with the previous month of 526,000, so significantly down, but we must not lose sight of the fact that expectations were around 318,000, so lower than expectations. Perhaps, though, more attention was paid on the unemployment rate, which rose from 3.5% to 3.7%. And this indeed gives an indication that perhaps the economic growth has begun to slow. And we look at factory orders for July, though I would rather wait to see the August figures. They were down 1% compared with expectations of 0.2 positive and the previous month of 1.8. And we can see when we look at the gold price, and silver is replicated, that we had gold falling during the course of the week, and then as those figures came out, we started to see a bit of a rise. And if we look at silver equally for the week, you can see it reacted, in fact, quicker, because we could see silver dipping, apart from a little blip at the start of the week, dipping all the way down. And then once the figures came out on Thursday, let's look at the dollar rather than the euro, but it's very similar. As the figures came out, we could then see it starting to rise, but not significantly. And why? Because if we are going into a recession, then perhaps interest rates will not rise as quickly or to the same extent as if we weren't, though inflation is stubbornly high. But of course the demand for products, including silver, will fall, which is why we've seen the silver price fall considerably higher than the gold in percentage terms. However, our view at this stage is that even though the non-farm payrolls were disappointing, these figures are not bad enough for the FOMC not to raise interest rates towards the end of this month. And we still hold the contention those rates will rise by 0.75%. However, there's still some data to go before that determination is made. Now, what do we have this coming week? On Monday, Labor Day holiday, so nothing scheduled. Tuesday, this will be interesting, the services PMIs. Then on Wednesday, we have the Beige Book and international trade balance figures. The services will be quite interesting, especially if we compare them to manufacturing, and if they are broadly as per anticipated, not a lot is going to happen. Thursday, we have the initial jobless claims. That will be looked at quite closely, and so will consumer credit. And then on Friday, wholesale inventories revision. Now, frankly, there is not, in our view, enough this coming week to have a major impact on gold and silver prices as far as economic data is concerned. If there is going to be a change, then Tuesday may have a little impact because, of course, the markets will open again and we shall see essentially if there is a follow-through of the either the last-minute rise in gold and silver, or whether we will revert back to a falling knife. Now, before we move on to our predictions for gold and silver, a little bit of a small advertisement, really. A few months ago, we interviewed the CEO of the Pure Gold Company, as you can see on the screen. And these offer investments in gold and silver, both offshore and onshore. And they have advised us already that a number of you have made contact with them. Some of you have invested with them, and others are listening to whatever sort of advice or guidance they are giving. Now, we've put a link below to this company for those who, as prices are continuing to fall, are beginning to think perhaps this could be a good time to invest. We're not saying it is necessarily, we're not giving advice. However, if you're in that frame of mind, at least sound them out, even if it's just to find out additional information. Now, we've been approached also by a number of members who come from the UK, so the Pure Gold Company can deal with you anyway. This next one is a credit card, capital on tap, mainly aimed at small businesses, and they define themselves as the credit card built for small businesses. Now, I have to say that I actually have one of these cards and have had it for a number of years, and I have found it to be excellent. And they even answer the telephone when you have an inquiry, literally within 20 seconds of ringing. None of those waiting 10 or 15 minutes for someone to answer a call. They offer an uncapped 1% cashback. They have rates as low as 9.9% APR, credit limits up to £150,000, and an unlimited free rate number of company cards so that you can give them to your employees. Now, unfortunately, it is restricted to UK only. We've put a link below. On both of these products, we will gain an introductory fee or commission from those companies. We'll declare that up front. However, if we did not believe them to be sound, then we would not be promoting them to you. We are entering a phase now where businesses are beginning to suffer and cash flow is a problem, and this is potentially another avenue to gain that much needed liquidity. Though, we hasten to add, we always recommend you pay your credit card debts in full at every possible opportunity. Now, going back to gold and silver, what do the technical analysis whiz kids think is going to happen to gold and silver this coming week? Well, a number have predicted that $1,680 is a technical line in the sand for gold. There will be psychological support at $1,700, and historically $1,680 is where gold has dipped previously and recovered 3 or 4 times in recent years. These very analysts are also predicting that inflation, or CPI, in the US has potentially peaked. We're not quite so certain, and even if it has, the Fed is still going to make sure that it drives inflation down. Another rate rise, therefore, of between 0.5 and 0.75% is a certainty. We still favour 0.75 increase, and so we're not convinced yet that gold is quite out of the woods as far as price depreciation is concerned. Silver is unfortunately in a world of hurt, though fortunately if you're considering buying some. The market is still attempting to protect it at the $18 level, and if this breaks and the Fed maintains its aggression, then, as we have stated for some weeks, $15 silver cannot be ruled out. And it is around that sort of figure that we ourselves will be looking again to purchase. If, however, it manages somehow to budge above that psychologically important level of $20 and then progress to an important technical milestone just at or around $21, then we could see a bullish trend developing. Our view? Don't hold your breath. Now, with so little important data being published this coming week, we're not expecting significant moves for gold and silver in either direction. However, we will expect to see movement prior to the FOMC meeting on the 21st of September. But please note, before then, the European Central Bank is meeting on the 8th of September, that's this week, and what they decide to do with interest rates could indeed affect the dollar index, which is so high now, and is without doubt affecting commodity prices and precious metals in particular. Also, the Bank of England's MPC, that's Monetary Policy Committee, the UK's equivalent of the Fed's FOMC, is then meeting on the 15th of September. Remember, the FOMC is meeting on the 21st. And again, its decision could have an impact on the US dollar value in either direction, depending how aggressive this week the ECB is, and the following week the MPC is. So, making a prediction this week, if there is a change in precious metal prices, it will happen either just before or just after Thursday the 8th. So with this in mind, we expect to see gold trade between 1650 and 1750, and with 1625 and 1775 as outliers. We forecast silver to trade between $17 and $19, nice and clean, with 1650 to 1950 as outliers. What do you think? Do share your thoughts, please. Thank you so much for listening. If you haven't done so, subscribe to the channel. Press that bell sign so you're notified of our videos as and when they're published. If you haven't done so, take a look at the Pure Gold Company, and if you're from the UK, at the Capital on Tap credit card. We've put links below and also in the comments section. Finally, we wish you all a safe, enjoyable weekend and most prosperous week ahead. Illuminati silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.